It's 6:38 on Breakfast Business with Vincent Wall. Up to 800 people have registered to attend the RDS in just under an hour's time for the presentation of estate agents CBRE's annual report and outlook on the commercial property market here. And CBRE Executive Director and Head of Research Marie Hunt is here to give us a sneak preview. Marie, you write that we are getting into the later stages of the property cycle, the commercial property cycle in Ireland and in Dublin in particular, but still very buoyant last year, and you're confident of the year ahead.
Absolutely. I think we came through 3 phenomenal years, 2014 to 2016, when all the deleveraging was going on. So I suppose what we saw in 2017 was a return to more normalised conditions. And we're very bullish about 2018. Looking at the amount of occupier and investor activity that's there, it looks like it's going to be another very strong year.
Interesting, looking at some of the details in your report, there was quite a lot of activity by UK-based firms into the Dublin market last year, and you expect more of that this year?
Well, the way we would describe Brexit really is it has been a positive for the office sector in particular. Last year was the best and the highest office take-up ever recorded in Dublin, 330,000 square metres. And a layer of that is coming from the UK. So really what was interesting to us is that the volume of take-up by UK companies had more than doubled year on year. So that suggests that there is a Brexit effect in the office market at least.
And are more UK potential investors talking to you now about perhaps locating here in some way during the current year?
Yes, we think that the Brexit effect will solidify even more over the course of 2018. There's lots of companies looking at space, and I think this will be the year when they'll actually identify buildings, and we'll hear a lot more Brexit related and shadow Brexit related decisions over the course of the next 12 months.
Now I note also that of the 237 individual transactions last year of a certain size, more than 130 were linked to Irish companies. But do you believe, as I see Lisney, your competitor, is writing this morning as well, that you know the pressure on space in the central business districts of Dublin will push Irish companies out into the suburbs and perhaps regional cities as well?
Yes, I think we're definitely seeing more appetite for suburban locations, particularly the south suburbs of the city, and a large part of that is driven by cost, because rents in Dublin are now at approximately €65 per square foot at peak levels. So for some companies that are cost conscious, they put some of their staff or some of their operations in suburban alternatives. And last year we did see a pickup as well in appetite for locating outside of Dublin, and indeed only last week Jaguar announced 150 new jobs for Shannon. So we're going to see more and more of these job announcements happening outside of the core Dublin market.
You mentioned €65 per square metre for premium office space in Dublin. Do you think that can be sustained through the current year?
We're not predicting any change in that for 2017, but that really is the headline quoting rent. What we found last year when we analysed all of the deals that happened is that the average rent for the city, for Dublin 2-4 at least, was about €48-49 per square foot relative to the 65. So average rents are lower, but the headline quoting rate at 65, it's probably going to stay in and around that level for most of 2018.
Now, late cycle, as you suggest, for office development, particularly in the Dublin area, but you see potential for significant growth in returns in the industrial and logistics property sector.
The industrial and logistics is undersupplied really, and it's probably because rents haven't been at a level where new development was viable. That has now changed, and rents are at a point where development is viable. There are 3 speculative schemes underway in Dublin now, so we're beginning to see some stock coming through, but it's going to take some time before that stock is available, and as a result rents are going to continue to rise in that sector, and we're suggesting they're going to rise by another euro, from €9.25 per square foot to €10.25, which is 11% year on year growth. And as a result of that, investors will be very keen to purchase in industrial and logistics assets because they're going to generate better rental growth than any other sector.
Now, Irish Life last week told us that they were in conversations about possibly getting into the residential property market here as early as this year, build to rent sector specifically. You see quite a lot of potential for that, and more institutional money perhaps coming in from abroad as well for that. In
the last 12 to 18 months, this whole build to rent terminology has entered the lexicon, and a lot of people are talking about it, and absolutely we're seeing huge institutional appetite to get into that sector. And I suppose people can see the demographic profile in Ireland. They understand the supply-demand dynamics, and particularly in cities like Dublin where there's undersupply, there's a wall of capital there looking for opportunities. The Urban Land Institute in recent months produced a build-to-rent guide for Ireland, so a lot of institutional investors are reading that with interest, and there's a lot of appetite there to get into that particular sector. sector.
And do you see more overseas capital coming in? We see the likes of Kennedy Wilson already here and others.
We have some players in the space already, but absolutely most of the capital that's looking at this is international capital, most of whom are investing in build to rent in other jurisdictions, and particularly in the UK, and a lot of US money as well.
OK, we'll leave it there. We better let you out to those 800 people in the RDS, Marie, in less than an hour. Thanks indeed for joining us. That's Marie Hunt of CBRE.